Mosaic $1 billion buyback. I should be on YouTube. Someone can post that link. I'm just going to get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All trades placed by me are placed through T3 Trading Group. You should carefully consider if trading is suitable for you in light of your own financial condition. Here is the position disclosure. Here's that other screen. And here is a chart. Man, these market moves are so crazy. Look at what we even just did here since the market closed. Huge rally in the first 5 minutes after we closed, selling back off to where we closed at, and then rallying like this $2. These are we're moving $2 every 5 minutes here. It seems like in the Spies, even after we've closed. Just crazy, just crazy. Good, Christian. Is Mosaic moving on that dividend increase and buyback? Yeah, moving down. Mosaic getting hit here after hours. I didn't see the actual numbers. I just saw that they announced a $1 billion buyback and raising the dividend. I generally love that. We've got Teladoc trading up after hours. Oh, nope, back down. Oh, man, back down. Looks like their adjusted EBITDA was a beat, but I'm not seeing any other numbers there at a Teladoc yet. This OCGN was on the day trade list today, and they just announced a secondary after the close. So I had just said, I hope no one swung that, because this was actually, even though it's a cheap name, maybe one of the better day trades of the day today, at least to the long side. And now that's gone. Okay. So anyway, let's get into the heart of it here. Spies closed down 0.7%. Qs closed down 0.5%, and the IWM closed down a full percentage point. Honestly, it felt like to me we closed down a lot more than that. Maybe it's just because some of the things that I've been having on my watch list was pretty relatively weak today. But I guess just to recap, you know, starting on Monday with the headlines coming out that Russia has troops in the Ukraine and the Putin speech, and they're recognizing some other provinces of Ukraine as independent, that really crushed the market futures. I remember seeing the NASDAQ futures down over 4% at one point last night before I was going to bed, and I was actually really excited about it. I was really excited to come in and buy that dip, just because all the data shows that these wartime situations lead to these initial sell-offs that every single time has been a viable opportunity, just about. And we discussed last week in one of the afternoon meetings that chart of the market sell-offs and how they, you know, kind of lead to buybacks. I've seen over the weekend that data coming in from a couple different ways, and it looked like right away yesterday, even as the market was closed for President's Day, there were analysts coming out with information. I think, I don't know if it was actually accurate information or not, but Josh had texted me at one point about Ukraine's GDP being about like 18 months worth of sales at Walmart or something like that, which is not to take away the significance, and I'm not sure if that stat is even correct. It's just kind of to highlight a point here where we do want to keep things kind of in perspective. And like I said in previous meetings, I traded through Crimea. I traded through, you know, aspects of the Afghanistan situation that lasted for so long. You know, different little wartime situations, and it's never led to any sustained selling. And again, if you look at the data going back even longer than my trading career, it kind of also confirms that. I guess the bigger fears are just bigger picture stuff. You know, Is Russia, is this just a step one to reclaiming the USSR, things like that, obviously got all the World War III headlines that people come out with. And I think that's over-exaggerated, personally. I guess only time will tell. But I was viewing this as a great dip buying opportunity last night. And I guess I slightly overslept this morning because I woke up, I guess, around 5:45 or so. Or maybe logged into the computer for the first time at 5:45. I probably woke up just a little bit before that. And by the time I woke up, the market was basically flat on the day. So we had gone from negative almost 4% in the NASDAQ, negative a couple percent in the S&P, to basically being flat to positive by the time I woke up. You can see here there was still a little window of opportunity between 4 and 5 a.m. Eastern time to be able to buy the dip in the market a little bit before that rally. It's just very difficult to be doing a lot of buying between 4 and 5 a.m. Eastern time just because liquidity is so thin. You get one headline in the other direction, you could get really stuck in that. But I the early bird catches the worm. I was not the early enough bird today, I guess, because by the time I got up, got logged in the computer, I should say, around 5:45, this rally had just happened. We were flat, and then we kind of just traded back and forth around that flat area more or less until the market opened. Then right before the market opened and right into the initial market open, we sold off a little bit. So that it did end up being a common gap down this morning. You can see that common gap was actually quickly filled. We ticked positive in the S&P, NASDAQ, and Russell. And then that just led to this real grind lower. I actually remember seeing this candle right here at 10:20 right before I got off the radio and thinking, that's it. There's going to be no follow through, because I just didn't like the shape of this candle. I didn't like that it went after highs. I think maybe the NASDAQ made new highs on that candle. No, it did not. The IWM made new highs on that candle, tried to get above $200. And I was like, that's it. I don't think we're going to get any follow through because of the shape of this candle. Lo and behold, just to make it extra confusing, the next candle actually made a new high, but the overall thought process was still right. We did not get any upside follow through from there. And again, just to recap the morning meeting, this was a really tricky open, because where we opened this morning, about 432 or so, it's almost where we are right now in the Spies, just under 432, we were significantly off pre-market lows. Pre-market lows were like around 428 or so. So we were $4 off pre-market lows, but we were still, $8 extended to the downside based on our SPY daily chart equilibrium area. So it just made for, and it was a flat open, and it was with all the headline risk. So it just, once again, made for like a really tricky open this morning. I just didn't have good conviction in either direction. It's like, do we continue the bounce that started pre-market and work our way back towards like that 440 area where our lower band of equilibrium is? Do we stay weak? Because there's plenty of reasons for this market to be weak right now. I mean, and again, forget about Russia for a second. The big story here is still economic growth with rising interest rates and inflation. Are we still having enough downside momentum and breaking key levels with all these bad headlines hitting where we make our way back down to lows? So from the kind of the mental thought process there, and then combined with the technical aspect of a flat open, I just felt it was really difficult to have conviction in a further bounce or a further sell-off kind of from where we are. And if you look at the technicals of this candle, just a crazy looking spinning top type doji, interestingly enough not on huge volume, it kind of confirms the thought process of the morning meeting today, which is, it's a tough spot. Who knows what's going to happen? Almost felt like a coin flip, and we were a little bit all over the map. After this kind of failure here at a new high, we just turned into this brutal downside grind midday. It was pretty decent downside slope here too, considering the time of day there. And then that ended right before Biden came out with his speech, but notably, and I was able to type this into the VTF because I saw it hit, this 15-minute hammer here. As that was about to close, I called it out. That turned out to be the low of the day. Called it out a buy off lows because of that type of candle for a bounce. The bounce turned out to be bigger than I expected, but again, we're in a high volatility market, so all movements tend to be elevated in these types of environments. So this was actually a really good trade for anybody who came in and bought it. Volume did elevate onto this candle and then elevated even further on the following candle, which is when Biden started to speak, and that turned out to be the low of the day. I was really looking at the Qs, which were a little bit more extended to the downside on a 15-minute chart, I believe, than the Spies were. So we managed to be able to actually kind of perfectly nail that quad on the low of the day off that hammer. Not sure if anyone was able to really capture it with conviction. Definitely hard to have conviction on more than just an oversold bounce, but it did give more than just an oversold bounce. And then once things were looking good, I was then almost thinking here off this rally, I was like, man, imagine if they just now, everybody is just so bearish right now, and then, you know, this hammer comes in, Biden speaks, imagine if they rally us back to highs. That's what I was almost thinking here into the close, which would be just leaving us with an insane potential bottoming candle and kind of double bottom for the NASDAQ and some of these indices here. But instead of that happening, we then got blasted by huge MOCs to the sell side. I don't remember what the number was. It was over 3 billion, right? I generally find that any MOCs that market on close that is in excess of $1 billion to be market moving, and we get an MOC that's you know, an early look at it that's over 3 billion to the sell side, and you know, just when I'm thinking maybe we might have a really interesting rally here under the close off what this price action just was, and I know that we were a bit extended here, then those MOCs came out and, you know, made us weak and sold us right back down. So this was just another day of absolutely nutty price action, particularly this last 2 hours. The trading session today was very all over the place, and it's still just hard to have conviction. You know, so now for our setup for the rest of the week, or setup for tomorrow, it's not really too different than where we were coming into today, right? We're a little bit extended to the downside on our daily chart, albeit with each passing day that we spend down here, we'll be less extended, which makes it easier for the market to go lower. This candle is a big, like, spinning top type doji, which basically means a doji that has a large upside tail and a large bottoming tail. And basically what this type of candle represents is typically indecision or change, and we definitely have indecision. Do we have change? I'm not so sure. You know, I think we'll have change if we're getting above 440 in the Spies. That's where I'll start becoming a little more technically bullish again. But right now, we are in a bear market. We are trending lower. You're better off erring to the side of being short. Just you need to keep in mind your extension rules. I don't like buying extended markets to the upside. I don't like shorting extended markets to the downside. And that is kind of where we're at. We're in a market right now that's extended to the downside, but easily could become more extended to the downside. And then again, you know, we're up $2 already in the Spies after the market closed. So I guess that inclines us to think there's a higher probability of a gap up tomorrow, but who knows? Who knows where we'll be by 9:30 a.m. tomorrow. So that's the indices. Definitely tricky. A lot of volatility, a lot of choppiness, a lot of indecision. As far as individual names go today, also turned out to be a little bit tough. We had a couple decent opening type trades on the radar. I already brought up this OCGN. We saw this OCGN get hit with news this morning. Not normally my cup of tea, this type of stock. I don't really like biotechs kind of as a general rule, but we have seen this thing kind of be like a Wall Street Bets type name in the past, so I know it has the potential to move. So I'm seeing news hit. I know what kind of stock this is. So I thought $4 was a level here for a trade. I know some people on the team here took it. You have a little bit of an ignition bar here around 940. Sorry, excuse me, a little tickle in my throat. A little bit of an ignition bar here around 940 that led to an okay price movement here to the upside of over $4.50. This is a big intraday move, but that's why I put the stock on the radar, because even though it's only a $4 name, I know that this has the ability to move. And then this one was okay, you know, closed 20 cents above the level, just to now announce the secondary. So again, I hope that no one kept this overnight, though if it was me and I was in it and it was my idea, but I ended up not trading it, I probably would have kept it overnight, to be honest, just because of how well it closed, and now I would be upset as it is trading 60 cents lower because it announced a secondary offering. So that's OCGN. Macy's was a idea for today off the earnings report. I thought the earnings report looked great. Interesting enough, retail in general, as represented by the XRT ETF, was very weak today, down 4%, despite Macy's. I actually thought that Macy's earnings was so good looking that it really might bring up kind of that entire sector. It did not. Going back to Macy's here, though, the level I was looking at was $28. $28 is also where it failed pre-market. Pat had a great call out to the team here where he started buying it pretty early. It looked like around 27 bucks. He announced he was buying it as a little bit of a cheat. Now, you definitely had the volume there. Things were looking pretty good on it. So that cheat gave a good reward. By the time my alert went off for $28, I didn't want to take that trade through 28. I just felt it was a little bit extended by that point. Gave a good technical pullback. You could have attempted a buy off of this low here, which obviously would have failed, as then Macy's went into a total failure. And Macy's ended up down almost 5% on what I thought was a really solid looking earnings report. So that's not great. But definitely enough of a move here, I think, for people to get their risk covered if they were buying when Pat was buying. Big disappointment on the day was definitely energy, XLE. In my thought process, so first of all, pre-market, I was so pumped that I had some energy stocks on my swing portfolio here, because I was like, oh, thank God, And I remember wondering last night when I was seeing where the futures were and how smoked they were, wondering if the energy names I'm swinging were going to be able to act as a little bit of a hedge for me. And when I woke up this morning and I saw that they were all up so much and XLE was up so much, I was like, oh, this is great. At least I've got these things working in my favor, as some of my other swings are opening against me. And as a result, we put these really on the radar for today, and that really did not work out. This XLE, I thought here, it's been building out this bullish pattern for so long. And I had said into the beginning of February that I thought that the XLE was a little bit overcooked. And you could kind of see that in Pat's note where he posts the individual sectors. I don't know if that's sentiment or positioning. I'm assuming it's sentiment, but Pat, please correct me if I'm wrong on that. That XLE had kind of been in the sell radius when it was getting here in early February, which added to my thought process of it kind of being a little bit overcooked. So when a market or a sector has had a really big move in a relatively short period of time, oftentimes it just means that you need a deeper price or time correction. Time corrections tend to be more bullish than price corrections, and that's what we got here. We were overcooked in early February, and now we spent the last couple of weeks basically going sideways. We started to build out that wedge a little bit that I discussed might get built out. The 21 EMA was able to catch up. We totally satisfied the overbought conditions here in the XLE coming into today. And coming into today, oil prices were up really big pre-market. Natural gas prices were up really big as well. Obviously, that's at least partially being brought on by the Russia headlines. And I still think that the Russia headlines are kind of masking the real story here. But now everyone has become so focused on energy prices in Russia that you really see the market moving, and a lot of times in opposite. The energy market and the S&P have been moving in opposite a lot based on kind of these Russia headlines in a really big way. So all the same, with that gap up, I thought maybe today is the day where these things can finally go. So I put a bunch of these levels on my radar for the day today. XLE for 70 bucks, kind of first and foremost, is the real breakout spot. And I hope no one, bought this because it didn't kind of really trigger. I guess maybe you could have bought this thing the second it opened and got yourself stopped out at $70 if you were just looking for a pure momentum trade. For me, and this is what I was talking about, the short time frame upside extension was just too much to be able to buy the open. But what I wanted was for this thing to hold up. Maybe not break 70 right off the open, hold up beneath 70, let the ADMA catch up, let the moving averages catch up. This is what's showing relative strength. And then we get that breakout through $70 in a much more actionable manner. And that's not what happened. They wrecked these energy names down really hard. They price corrected them really hard. right into the 80 MA. And the 80 MA is our lower band, in this case, our upper band of equilibrium. So it's where you would want a little support to come in. And we were in real time talking about this little bounce. And I remember saying, I just don't trust it. You know, the opening momentum selling was just too heavy to really think that we're going to put in a low right here and work our way back to $70 today. With that said, we've definitely seen that happen in XLE over the course of the last couple of months, where they do gap it up too big, sell it pretty heavy, and then next thing you know, it's making new highs in the day. But that does tend to be a lower probability situation. Energy's just been so strong recently that those lower probability situations were happening sometimes. So here, you know, dead cat bounce, nothing. At this point, I was really just hoping is the wrong word. I was really just looking for stabilization more than anything else. I thought that the opening sell-off in XLE was telling us more or less not yet. You know, not that the chart's going to be broken or anything like that. It just wasn't ready to actually break out yet. It needs to continue to have its kind of time correction. But they overshot that to the downside also. So we didn't technically close below this pivot here from February 15th. And we certainly haven't negated the positive Maribozu from February 1st. But this is kind of a bearish engulfing candle. And if we get much lower price action, really start losing that 21 EMA, then it could be pretty bad because we all know from a failed move comes a fast move. So if this bull flag, and today's a pretty damning candle, if we really start losing the support of this bull flag here, which is a little bit below 67, we're actually beneath it at one point today, but again we closed above it. If we really start losing the support of that bull flag, we could be looking at one of those from a failed move comes a fast move situation, and we could be seeing an XLE back at $64 or even a little bit lower very quickly. So for the time being, because it's still closed above the area, I'm sticking with the trade, but this is definitely a candle to take notice of for the energy bulls out there, for people who are looking for that rotation from growth into value, that eventually when bear markets rear their ugly head, it doesn't matter how relatively strong you are, eventually you start losing everything. And again, we did get, I don't even know if I mentioned this, I should have, we got a new yearly closing low in the Spies. Not a new absolute low because that one day in January was so insane. We got a new yearly closing low in the Spies. We got a new yearly closing low, I think, yeah, for sure, in the NASDAQ, but not in the IWM. The IWM has been relatively strong for the last month or so. So that's really where my focus was. Not a great day trading wise for me today. I did close down some money, which is what it is, and I was really trying to actually not be too aggressive today. I just kind of want more clarity on the market, but some of the names I was looking at that I thought could be in play didn't give follow through. These energy stocks I thought could have relative strength today ended up failing. So I finished down a few bucks today. And that's how the business goes sometimes. And now we'll just see how the rest of this week goes after this indecision candle that we kind of had today, if we're able to get the oversold rally continuation, or if this is just that the market wants to go down and couldn't go down because it was too extended to the downside. So that's all I got. And with that said, I'm happy to turn it over to all of you for questions. Let me scroll up in the virtual trading floor here a little bit. Jerry's saying all these buybacks but no buyers. I guess Mosaic was the one with the buyback. Yeah, the only company the only buyers out there are the companies themselves who have buybacks, is what it seems like. Nobody else is out there at all. You look at like Bed Bath & Beyond today, which still has that monster buyback. It's like, is there literally no one buying Bed Bath & Beyond but me, Stefan, and the company? That's what it looks like right now. This company can't catch a bid no matter what they seem to do. This was a real failed move down here in Bed Bath & Beyond. This thing was looking a lot better when we're starting to give these closes above 16. But Thursday last week it lost it. So again, from a failed move comes a fast move, and now next thing you know, we're a couple dollars lower and below $14 again for Bed Bath & Beyond. Cool. First question I think I'm seeing is from DJ. How many rules did you have when you were in your first year of trading? As you gained experience, did you begin getting rid of some rules, or did you hold on to all of them? Do you generally follow them to the T, or are you loose with them? Cool. So some great broad questions here that I'm happy to discuss. Broadly, I would say that my rules evolved over time. My rules evolved with my knowledge, with the change of the market, with the change of my trading style, with the growth of my own account over time, and the growth of my knowledge. So some of the rules are rules that I've had and I've been utilizing for years now, like my 3 rules for trailing that I have. I've been using that for years. I didn't have that when I was a brand new trader though. And then as far as discipline with them, I think it's really important to be very disciplined with your rules. I always want to be 100% honest with everybody. I was probably more disciplined about my trading rules when I was a new trader than I am now. Maybe that's not a good thing. You know, sometimes I think I know too much and I'll be a little loose with a rule, but I really shouldn't be. You know, the key to consistency in trading, to consistent profitability, I should say, in trading, is to approach the market in a consistent manner. How can you expect to be a consistently profitable trader if you're doing different stuff every time you're looking at the market? It's just not going to work, right? So the only way you can be consistently profitable in the market is to approach the market consistently over time. Well, how do you approach the market consistently over time? The only way to do that is by having rules. Rules enable you to have a consistent approach to the market, and then having a consistent approach to the market enables you to have consistent profitability. So I think that it's really important, especially for new traders, but really for everybody, to have a series or a set of rules, follow them to the T, and then when it comes to changing rules or making adjustments to rules, what you want to do is you want to make small adjustments to your rules based on large sets of data. It should never be one trade, all of a sudden you're throwing your rules out the window and you're changing everything. It should be, all right, you know, I've seen this happen 1,000 times and I recognize I need to make an adjustment to this aspect of my strategy. Or, you know, my account, I had a conversation recently with someone on the phone who's doing well, and it was asking me about sizing up. And I was like, awesome, I love these types of conversations. You're coming with me, coming at me even in a difficult trading environment here because you're doing well and you want to size up. You know, even when you're doing that, it should be based on rules, and I really recommend that people size up slowly over time and build that data, and then you can size up a little bit more, or you can take a pause on that depending upon how the new performance goes. So yeah, and I established a lot of rules very early on in my career too, pretty much right away. When I was still on the demo account, really. I established tier size rules, I established risk rules, certain game planning rules, and then I followed it really closely. From Terry Jones, CAG if you have the time. I'm looking for a move like KHC in the near term. Alright, I don't know ConAgra brands as well as I know Kraft Heinz. I actually know Kraft Heinz as a company decently well because there's a period of time when I was trading it very actively. CAG, I can tell you, has a nice little bullish pattern here. Doesn't seem to be a big high-flying trading stock. You want to close above 36. Close above 36 could set this off on your next stage here. Obviously, kind of a consumer staples company along with Kraft Heinz. Kraft Heinz gave a really big 3-day move, but sorry, 4-day move now. But I believe that was off an earnings report here initially, right? So you need a catalyst to get some sort of move like that, especially in a stock that's more of a consumer staple. I don't really remember looking at the numbers too closely 4 days ago, but Kraft Heinz always had really big debt problems, and that's what caused this huge gap down here in 2019. This is when I was trading it a lot, back in 2019 when there was a lot of news going on. It was very gappy. It was generally pretty bearish, but it would stage really huge rallies. And Warren Buffett was involved in it, though. There was a merger there that created all the debt, and I think Buffett said that at one point that he regretted his purchase, but that he was going to stick with it because he felt that he had miscalculated kind of the debt situation on there. And now here we are, some years later, and for the most part, it's in the same area. But this last 4-day move is fantastic. But again, the point is, this was started by a catalyst. So can CAG give you a nice move as a secondary, as a consumer staple, as a breakout? Sure, but I don't think that you're looking at a repeat of KHC in CAG without a similar type catalyst. And you can't bank on a similar type catalyst because, you never know what a company is going to report or what they're going to say. Here from Sebastian. Today I was looking at Exxon Mobil. Me too. I had all of the energy names on the radar because they've been so relatively strong recently and so strong pre-market. I had called out an $80 buy for the team. So luckily this did not trigger. It had news, it was strong, I liked the daily, I decided to buy in the pre-market. When at 9:10 it broke a consolidation, stop loss was near 78.59. Okay. Okay, I like this entire thought process. You cheated a little bit on the level that I had been looking at with the team here at $80, but I love your thought process with the relative strength. You analyze the pre-market action. Not huge volume there pre-market, but I like the idea of getting a jump start on something that you have high conviction on. I gave momentum before the open. You sold 20% of your position around 79.70. Nice sale. Maybe take off 50% next time to get your risk fully covered. I expect a nice move, and with the Russian news and the pullback in energy, I thought it could be a good swing, but at the open it sold off pretty bad. Can you give me some comments in the trade and maybe tell me if I missed something? Also, just for informational purposes, what do you consider to be resistance in, DTE, second one. Yeah, so that's my feedback. I basically already gave it to you. I really like the idea. Energy was on my radar for the same reason it was on your radar. $80 was my spot, but similar to how Pat got a great head start on Macy's today because he recognized the internals of the price action. You're able to do the same thing with Exxon. The only thing I would say is, when you have a trade that begins to work in your favor, you always want to try to get your risk fully covered so that if that trade fails, you don't lose anything. And maybe that would be the only adjustment that you could make. Obviously, the flip side is if you took off more of your stock to get more of your risk covered, then you wouldn't have had as much for a big move. Which, we always got to calculate that. But I tend to be pretty risk averse on initial trade entries. I love to get my risk covered. So for sure, great job there, Sebastian, even as it did not work out. DTE, what do I consider resistance in DTE? I would say like 120 on a closing level, but it's a little bit sloppy. So 120 on a closing level, maybe 121 on an absolute basis. So in that type of situation where you kind of have a resistance range, I really want to see something else confirming the price action, like heavy volume or option flow if you're trying to buy 120 as opposed to 121 to try to make it a lower probability that you're just, buying through 120 here, and it's just another one of these days where it gets a little bit above and fails. So 120 on a closing basis, 121 on an absolute basis. Look for that heavy volume or option flow through 120 if you're getting a jump start. Cool. From Dalek here. Yeah, so KHC we spoke about already. That's just continuation here off of this move when the initial news catalyst came out. I'm sure it helps that it's a consumer staple, and consumer staples have been relatively strong. I was looking at Roku today. I was looking at DKNG today, and we were communicating these names really early because it was impressive to me. What did Palantir end up doing? Not so great. But the early on relative strength, we noticed it very quickly. PayPal is another one. I want to see what that thing did by the end of the day also. This opening move here in DKNG, I was communicating. I thought it looked great. Went green first. Great opening candle. Stock is oversold to the downside. I mentioned in the pre-market in the morning meeting that I really like the idea of the company. I just need some sort of catalyst to come in that can get me long, and it definitely hit today. That opening move, the relative strength, going green first, the downside extension, closing well today. A lot of things to like about that. And Roku was similar. The difference was that Roku closed well on Friday, whereas DKNG did not. And guys, I'm paying really close attention to this. I'm paying really close attention now. Ever since Robinhood, because it did it first, reported those terrible earnings and they ripped it higher off that, I'm really paying attention to how these other growth type stocks are behaving on the day of a bad earnings report or the subsequent days. Because if we start consistently seeing, and Robinhood was just one example, but maybe Roku's giving us a second example, maybe DKNG starting to give us a third example, if we can actually start seeing some of these growth stocks filling their gaps, performing well, even going positive post bad earnings, that's a real bottoming type signal that we certainly want to pay attention to. So Roku, great 2-day snapback initially here off the earnings low, but it's not even back to the 80 MA on the daily chart yet. The more this thing goes up, the more difficult it's going to be, but I don't think you can be genuinely bullish in Roku until it's closing above 140. But that doesn't mean that you can't have stock from yesterday or for today and be looking for that move initially, getting your risk covered, and then kind of taking it from there. So that is Roku. We're seeing some news coming out of OSTK. Is it moving? OSTK is up about $3 here after the close. Intercontinental Exchange announces strategic investment in T0 Group, which I think is owned by OSTK, right? Early, ahead of earnings. Okay. It's good for my one friend who is very bullish on OSTK and I think has been suffering a little bit into this recent pullback. What are your thoughts from Rich N here? What are your thoughts about insider buying of beaten up stocks as a layer of probability? Like insiders, like the CEO, COO, CFO, people like that. It's something to pay attention to for sure. So first of all, one thing that was interesting about last year, and I really was attributing this to tax structure more than anything else, is we saw like record insider selling last year, especially into the end of the year. And we haven't really seen much insider selling going on so far for 2022. I mean, there's been some, of course, but I think it's been normal levels, or possibly even less than normal levels, because like I was saying at the time, they were all front-loading that. They were trying to get that done by the end of 2021 because they were afraid of tax structures changes for 2022. Oh, that scared me. Some ice just fell off the roof here. It's a metal roof, so it's loud when it happens. Oh, sorry, got distracted by that. So we haven't been seeing the insider selling. I'd be curious to know if you have some examples of the insider. Yes, absolutely, filed legally. If you have some examples of insider buying that's come in. So I have read studies that have shown that insiders tend to be really bad buyers and sellers of their own stock. And as a general rule, it's not a great layer of probability to come in and buy just because the CEO bought or the opposite. I think there are some exceptions to that. I've always found that Jamie Dimon, as an example, has been pretty good when you see him start doing some insider buying of JP Morgan. But as a general rule, it tends to not be good big picture. Small picture, you will oftentimes see the stock get a boost that day or over the course of the next couple of days. So I would kind of put it, Rich, in the same category as analyst upgrades and downgrades. As you know, I really don't put much stock into the thought process of the analysts. I think for the most part they're jokers. But yet every day I'm paying attention to the companies that are getting upgraded and downgraded because it puts it in play. And by being in play, it's potentially better risk reward and higher probability of success on the trades that you're executing. So that's how I think about it, Rich. And I thank you for the question. All right, team. Looks like we got through it for today. I hope everyone enjoyed the long weekend. And we will pick this thing up tomorrow. We'll see how we gap. We'll see how the insanity continues. Have a great night, everybody.